and hear the sums, but we like to look over here and what's cooking, what's going on. Well, in gold, we've had something different happen than happened in silver, and is different than usually happens in gold during the summer. We added contracts.
Welcome to Gold Silver Pros.
Hey everybody, this is Rob Keynes with GoldSilverPros.com. I'm your host today for Thursday's presentation on Wall Street is betting on gold while the bullion banks are moving into silver. We're going to show you that dynamic on the COT report here in a moment, and we're going to walk over what's going on with gold and silver this summer. It's actually quite exciting. It's doing what I thought it would do this summer, which is hold up and not just crater down into the 1700 range for gold and the $20 range for silver. We'll get into that on the chart, and we'll show you why that's happening. It is July 13th, 2023 to date it, and we're recording this about 12:30 in the afternoon Central Time. You guys will see it this evening. Just wanted to time and date that, and because we're going to be talking prices. Let's get into the presentation, and let's talk about exactly what's going on. We're over at goldprice.org right now, and as of the time of the broadcast, gold is trading at $19.58 and 64 cents, up 83 cents. But look at the chart. I've got the 30-day chart up, and we're back to where we were this time in June. So we're not having a summer swoon just yet, ladies and gentlemen, either gold or silver. We're holding steady, and that's good, because when you're holding steady during months, which you don't typically tend to do as well, that potentially portends gold and silver doing even better when in the fall. Because if people are buying it now when they tend to be disinterested, it would tend to make sense that they would tend to buy more when they're interested as well. We're looking over here at Gold Charts or us at the chart. One thing I pointed out to you guys last week was, well, look at the dynamic here. We've got gold rising above its 50 and 200-day moving average. It was testing it to the downside, and I said, if it stayed below those moving averages, which are basically, you just take the price average over the last 50 days rolling, so it's updated every day, and 200 days, you take those two time frames, and that will tell you whether gold or silver or anything that trades that has prices on a chart is doing better than the last 50 and 200 days or worse than the last 50 or 200 days. Well, we saw the downtrend here in gold last week, and it looked like, well, if it breaks down and stays down below those two averages, we may be in a bear market. And that would make sense, because gold tends to not do quite as well, and silver not quite as well in summer, because people go on vacation and they just invest less in the financial markets, except when we have concerns in the economy. Of course, during the pandemic and COVID, gold and silver went straight up, and gold reached a new all-time high in 2020 because of the concerns, and it started during the summer. So when there are concerns in the market, whether it be macroeconomic or supply demand within the industry or the banks that had issues earlier this spring, of course, what you're going to see is a renewed interest in gold and silver as safe havens, and that's what we're seeing. And so exactly what I thought may happen during the summer has happened. We've broken back to the upside here on gold, and you can see the silver chart is right here. This is silver. You can see it's broken solidly above the 50 to 200-day moving average. So last week they didn't stay down. They came back through, and you see all this green right here. This is positive volume pushing gold and silver back up. Now, this is a futures trade, so this is not physical, has nothing to do with physical, but on the futures market, when people are putting positions in the summer for the September, October, and December contracts in gold and silver, they're looking at where prices may be to end of year. And because it's going up now in the summer, what the market is saying, they're expecting prices to be higher in the fall. They're predicting what the prices will be in a few months, because this is a futures trade. And that's why this is important. The market basically here is telling us gold and silver is going to go up, or they expect it to go up. They think it's going to go up in the fall. Of course, we'll have to see what happens. And I'm certainly not your financial advisor. We don't offer financial advice. I'll put that disclaimer up on the screen. But it certainly seems as though gold and silver are going to reverse the normal summer trend and do better. And that because we're looking at the futures market for these prices, which is where the prices are effectively determined on the market, is where they think gold is where the market thinks gold and silver is going to be heading into the latter parts of the year. That's gold, that's silver. But why, you say? Why? Well, all we have to do is look at the CFTC COT report. This is the commitment of traders. This is always in arrears. We're seeing data up through the day before July 4th. That would be July 3rd. And this is produced after the fact, because they collect the data and print it out usually about 10 days after. So we're seeing what happened during this time frame when we started to see this rise in gold. And during this time frame, we started to see this rise in silver. That's what this data here is telling us. They just put it in a different format. It's in a table. It's got a bunch of numbers. It looks confusing, but don't worry. I'm going to walk you right through it. So you don't have to worry. We're going to get you where you need to be in both gold and silver. And now it is a tale of two different stories. We're looking at silver here on this table. So what you do is you just grab a section of the chart. They smush all the metals together in one big fat table. We're looking at silver here. So you just start where it says silver, and then you end at the table where it gives you the summary. This is a summary table. This is all the silver data you need, and it's broken down into different sections. This section tells us the amount of contracts, and we can see right here in open interest, there's 114,000 contracts as of July 3rd. This is a little bit old data. We dropped overall open interest of 9,070, and that does tie into what happens during the summer. Overall, people are a little bit less interested in the precious metals, so you see a little bit less volume. The overall amount of contracts falls just a wee bit, but we're still healthy there. But what we also want to see is what each of the main players is doing. So what the CFTC does, they don't print line level or ledger level. They don't tell us specifically what everybody's doing, but they take all of this information and they roll it up into categories, useful categories, so we can see who as a collective is doing what within the market. So if you look at the producer merchants and you look at long and short positions, you can see that they've dropped 1,570 longs, meaning they're a little bit less bullish, and they've dropped 178 shorts. So overall, the producer merchants went a little bit less bullish on silver during the summer. And in reality, what they're saying is they actually expect the prices to rise because they would want to take a short position to protect against a fall in price. So if they're dropping longs, it means they don't expect price to rise. Or I'm sorry, they're not worried as much about price rising. They're worried a little bit more about price falling. And they're going to do that because they worry about that price as an input into their process. So the manufacturers are looking at the shortage here, and they're saying we need more short contracts to guard against the physical shortage, which makes sense because you're using the physical. So this first column is more about the physical. The rest of these columns, swap dealers, managed money, other reportables, and non-reportables, have more to do with speculation. It has more to do with betting on where that price may go. And they don't always deal in the physical, ladies and gentlemen. And you can notice they got much more contract positions open than the guys that deal in physical. The guys that deal in physical are about 30,000 contracts. That's about a quarter of the open market. Okay, the other 3/4 of the market is more speculative positioning. That's why we say the gold and silver markets in the West are determined by the traders, the speculators, because they've got 3 times the amount of trade going on that the people that actually use it, produce it, and use it in products do. Well, this is where it gets really interesting because you see higher volumes here on the movements. And you're seeing the swap dealers are dropping all sorts of shorts in silver. They're expecting silver to go long. There's about 1,200 net contracts to the long side. If you look at the short and the long positions together, the managed money is going a little bit short silver, and the other reportables are even. So the bullion banks are the one moving the market. They're the one dropping their shorts, which is why the silver price has broken through. They dropped their shorts. We had shorts. They dropped them right here. And because they dropped the shorts, we went long. This is all bullion bank activity right here. This is bullion bank action saying, we're going long silver. Home slice. You can see it here in the chart. See, this number tells you what's going on here. And when you drop shorts, you go net long, which pushes up the price. That's why we look at this nasty table on the COT report from the CFTC. Now we're going to look over here to gold. So I'm going to highlight that section for you on the chart. Starts right here where it says gold. This is your header. As of July 3rd, 2023, same date, because they put the report out on the same day. It's all an aggregated report for all the metals positions. And here are the sums. But we like to look over here and what's cooking, what's going on. Well, in gold, we've had something different happen than happened in silver and is different than usually happens in gold during the summer. We added contracts. In fact, we added 16,202. What a precise number. Who's adding contracts? Well, the producer merchants are going both long and short. They're like, we're producing, we're using, increased positions. So there's more interest in gold right now than there is in silver in the market. What about the swap dealers, the bullion banks? See, this is the legitimate hedging activity here, ladies and gentlemen, for people who both use and produce gold and silver. And that is approximately, what is that, about 55,000 positions? It's about maybe 14% of the market. The other 85% of the market in gold is determined by speculation, by the swap dealers, who are the bullion banks, by the managed money, who are the financial houses, by the other reportables, the wealthy individuals and family offices, and the non-reportables are a mystery that nobody will tell us who they are. We don't know. but they don't fit in these others. So we tend not to pay too much attention, but we'll look at them. So the non-reportables, these special use cases, edge cases, which nobody knows who the heck really are, they're the mystery meat or the mystery players on the market, have dropped more longs than shorts. So obviously they're expecting the price of gold to go down. But they could be in the minority because the financial houses, the Wall Street types, have gone long over 10% of their total position, about 13.5% of their total position in a week. 14,808 contracts to the long side. I've got that number highlighted. Managed money, long column, 14,808. So through July 3rd of 2023, that 10 days leading up till the last week of June and that first few days of July, the financial types, the Wall Street decided, let's, heading into 4th of July weekend, let's go bonkers on gold. We're patriotic. We believe in gold. Let's go. Let's go long gold before the fireworks start. And that's exactly what the financial houses did. Over here in the swap dealers, the bullion banks, they're like, screw that. We're dropping longs. We're adding shorts. That's about a $8,000 contract position move in 1 week for the swap dealer. So they, pretty much offset most of what the managed money was doing. Everybody else is going short mostly, except for the producers and merchants. Because they both produce and use. So you're going to see them change their positions, so legitimate hedging positions. But the speculation seemed to be for most people going short gold, short gold, short gold. But look at the financial houses. What does Wall Street know about gold that's not occurring in silver and that the bullion banks and the rest of the market doesn't know? Why is Wall Street going long? Who came in to the financial houses and said, take me long gold? Was it a big client? Are they trading for their house accounts? Who is going long gold? We don't know. We know it's in the financial sector. We don't know who, but it's clearly right there on the charts. That explains why gold and silver are both moving up. The dynamic is different in each market. Gold and silver are acting differently, but they're both up. And I suspect the managed money is going long gold because of the concerns in the economy, because of the concerns geopolitically. They're getting ready for the fall, and they're pre-positioning to the tune of 14,808 contracts, about 13 to 14% of the total open interest that they hold as a group. They're going long because they're anticipating gold ticking up as soon as everybody gets back and starts placing bets on the market here in August and early September. That's why they're going long a futures position in gold, because they expect gold to rise in the fall. The financial types are positioning that way, whereas the bullion banks are like, we're going to play around and we're not really sure, but we're more focused on what? Silver. They made their big move in silver. And that's what's going on with the markets. But in any case, it's helping both gold and silver because you're seeing them holding court and actually rising a tad since the beginning of summer. And we still got a couple of months left in summer. We're going to see what happens. But this is good news because the further along we progress in the summer, if we don't have a big crash in gold and silver, that tends to say, well, the fall is going to be really fun. So we may be looking at a really fun fall for gold and silver. We'll see. Another story I want to bring to you guys, a little bit lighter on the show, because we've had some heavy content lately. Let's talk about some fun stuff. This is an article over at Live Science. It's not a bullion outlet. They're talking about the historical significance of a Kentucky man finding 700 Civil War era corns buried in his farm. He's growing corn and he finds gold coins from the Civil War. And I added this up, and this is about $1.325 million of gold. I may not have, priced out all the sizes, assuming they're all, half to 1 ounce. That's over $1 million in gold sitting here, just in gold melt value. What about the collectible value of finding a set, a ultra rare, and the set looks to be in good shape? It says here about 95% of the hoard is composed of gold dollars dating to the Civil War era. Image Credit Numismatic Guarantee Company, NGC. Who is NGC? They grade a lot of coins. When we talk about collectible coins, I'll hold up a coin in a slab. It's usually either PCGS or NGC. NGC is saying about 95% of that is Civil War era coins. The melt value is over $1 million. Think about the historical value of 700. If you're a collector, when would you ever find 700 coins in good shape, confirmed by NGC, one of the two major coin grading companies saying, yes, these are legit. The collectible value of this has got to be through the freaking roof. I'm thinking it takes it from over 1 million to maybe what, 10, 5, 8, 10, 12, 15. And, you know, when you get into collectibles, the price is in the eye of the beholder. We don't know what somebody's going to buy you this, but somebody's going to come in and pay some bank for this. That I'm pretty sure at the end of this, that Kentucky man ain't going to be picking corn anytime soon unless he just loves his job. And some farmers love their job. I come from a farming family. I grew up in the city, but a lot of my aunts and uncles were farmers and ranchers, and they loved what they did, and they would do it regardless. But I'm thinking with this guy, at least $1 million, maybe up to 10 or so million in his pocket, he probably not too worried about the corn this year, I would imagine. I imagine this guy is like, hey, man, it's time to go take that trip to Europe. Ma, it's time to be taking that trip to Europe we all been talking about our whole life, and we didn't think we were going to make it, growing corn. But lo and behold, boy, I wish I had this cash in my backyard. My goodness. The Great Kentucky Hoard includes hundreds of U.S. gold pieces dating to between 1840 and 1863, in addition to a handful of silver coins. So all you silver gurus out there, he's got some silver. In a short video, the man discovered the hoard, whose identity and specific location have not been resolved in public, of course. Anyway, you've got the coins out there. According to NGC, which certified the coin's authenticity, and government where the coins were sold, 95% of the hoard is composed of gold dollars, along with Liberty coin, $10 Liberty coins, $20 Liberty coins. The rarest is an 1863 P, which is a limited edition, which is why it's got the P, 1 ounce gold Liberty coin. Just one of these coins can go for 6 figures. Just one goes for over 100 grand. See, ladies and gentlemen, that's the power of collectibles. And people tell me collectibles is not the most legit market. It's a scam. But when you see something like this, a single coin going for over 100 grand, I ask you a question. Would you rather be dealing with a rare, regular American Gold Eagle or one of those bad boys? I know the answer because that one was worth 6 digit, and the regular 1 ounce coin 2020 or 2021, it ain't worth $600 or $100,000 or 6 figures. I can tell you that much right now. So it shows a couple of things. Numismatic or collectible value matters, obviously, but also you never know when you're going to come across a big gold and silver hoard. And it's a perfect time. Why? Because transitioning into, well, we got the gold supply cliff coming. Thank you to our friends over at Crescat Capital, Tavi Costa specifically, for putting out this chart, coming on the program and showing it to us. He put out in 2020, and we're still talking about in 2023 because it's still relevant. Because what does it show? It shows that the amount of proven and probable reserves across all mines in the world for which we have published data shows that starting in a few years, 2028, we start fall. Actually, it starts in 2025, which is about a year and a half from now. But in reality, 2028 is when it really gets kicked off. This is how much gold and silver we have to mine. And guess what, ladies and gentlemen? It can take anywhere from 3 to 15 years to stand up a new mine. We don't have 3 to 15 years to stand up a bunch of new mines to get all this gold in place before we start hitting this gold cliff. What happens to prices when current supply starts to turn down and we're sitting on top of a freaking recession around the entirety of this planet, this rock that we call planet Earth? It means that the valuations are going to go up. It's a closed-ended system. Unless we have a bunch of asteroids just raining gold out of the sky anytime soon without burning up in the atmosphere to the point where people can actually get it and turn it into gold in big quantity, we're in trouble in the gold market from a supply perspective. And where are you going to get it? Where you're going to get it from the miners. The miners have to make up this difference. This amount here, this amount that we're going to be missing right here has to be made up where? From people digging it from where? From the ground, Mother Nature. Who are the companies to do that? They're the miners. And that's where we're going to talk about our sponsor for the program. You see how I did that? Nice little segue there. This is Rock Ridge Resources. They trade on the TSXV, the venture exchange under Rock. You can also get them as well over on the OTCQB under RRRLF. That would be the American market. The OTC's over the counters where you can trade stocks as well. And if you want to go to Frankfurt, you can get them in RRO as well. They're in the 3 major stock markets that you see the mining stocks typically traded. So no matter where you are, you should be able to find them. And getting access to that is great because it solves the problem of not knowing where to get it. But I wanted to show you what's really important. Think about this gold cliff and think about what's happening to gold right now. People want gold. Okay. Gold is going up. We're not having our usual summer swoon. That pretends a really robust market. We've got the gold cliff coming, but we need more reserves. Where are you going to get it? From companies like Rockridge. Rockridge commences drilling at its high-grade Rainy Gold project in Timmins, Ontario. It's announced it's commenced drilling at its high-grade 100% owned. They own all of it. It's not a big stream of royalty, and they don't have it farmed out to somebody else. It's located southwest of Timmins, Ontario. Why is Timmins important? Because Timmins is a big old mine. It's a big old mine. If you want to know exactly where Timmins is, it's right here. And look at all those mines. Pan American's got a Timmins mine. GFG Resources is over there. IM Gold is over here. Alamos is over here. All these projects are over here. This is in Ontario, where they have lots of historical production and current protection going on. The gold and silver miners love this area. And guess where Rockridge is hanging out? Right next to Newmont's Borden Gold, right next to GFG Resources, right next to Pan American, right next to IM Gold. All these big names, Alamos, they're right here. They're on trend, baby. They're there, and they got it, and they're drilling it out. The drill program will be designed to evaluate the strike depth and expansion potential of the high-grade zones of gold mineralization. Because you see, they had some previous drilling, ladies and gentlemen, in this press release. Whole RAN 2006, which returned 27.9 grams per ton of gold over 6 meters at approximately 100 meters vertical depth. What that means is it's near surface. It's cheaper to get it. You don't got to dig a big old hole in the ground. You got to dig a big old tunnel and run a bunch of equipment in there to get it. Some of this is at surface, which means it's going to be a little bit cheaper to get out of the ground. That means their project economics are probably going to be pretty good. Depending on what the rest of they find in this drilling project, they may find more of this kind of stuff, and that's going to get people excited at a time in which we need more, at a time at which, well, we're doing pretty damn well in the market. And given geopolitical concerns, we're probably going to need a whole lot more gold and silver. Rockridge is pulling it out of the ground just in time to help fill this little supply cliff here, and that's going to drive Rockridge up. What's going to drive Rockridge up right now is going to be those drill results. What's going to drive them in the future are the reserves that they're building off of those drill results. If you're interested, again, I've given the information on how to play Rockridge on the market. We're not your financial advisor, of course. We're here only to share information. We don't offer legal advice. Please do your own due diligence. But I've talked to management and looked at that, and I'm intrigued. It's on my watch list. It's the only gold and silver explorer on my watch list at the moment. I cleared the deck of those recently, and I'm starting to look at new companies. I've been looking at this one for a couple of months. The more I talk to them, the more I look at what they're doing, and the more I look at the problems with gold supply in the market and the demand that's coming up, the more I like them. I think heading into the fall, when gold and silver prices rise, the mining stocks are going to rise this time, because I think now people are going to realize with the problems in the world, they need more gold and silver. And eventually that demand starts at the bullion, and it goes into collectibles too. It'll drive the collectibles market really high, but then it eventually works its way in the mining sector. And when the mining sector goes up, it's leveraged. It goes up more than the gold and silver bullion price. And I think we're headed into the next year to 2 years where the mining stocks are going to start to get really attractive after the bullion starts to rise. And we've had a nice little early summer here in bullion. Now, the bullion could go down. Gold and silver prices could go down. They could still crash a bit. That's been most of the summer history of the metals, not always. But given the concerns, I think it's going to be up. And I think that means we're going to have higher gold and silver prices in the fall and into the winter. And I think that means the mining stocks are going to start to come back. I've been saying that now for a couple of months, and the evidence is there. I think we're going to get there. So whether you're into the mining stocks or not, whether you're into gold and silver or not, whatever the case may be, whatever your poison of choice, pick your poison. I think we have a lot of positive news, and that's what I wanted to bring for you today. But just remember, Wall Street is betting on gold while the bullion banks are going on silver. What are you betting on? That will be the poll today. Are you betting on gold, silver, or both? And are you participating in the mining stocks as a leveraged form of that investment? No harm, no foul. If you're not, maybe something you want to think about if you're in this market and you haven't pulled that plug yet. But tell us in the chat what you prefer. Is it gold bullion? Is it silver bullion? Is it a mix? Do you do the collector's coins? Do you do the stocks? How do you participate in this market? We've had a nice summer, ladies and gentlemen. If you're not participating, I would encourage you to at least look at participating, do your research, and then jump in where you feel comfortable. But tell us how you're participating, and let's have that in the chat and in the comments. All right, that is going to wrap it up for today, guys. That's our research report for today. Remember, stay tuned to tomorrow where we dive into a much more detailed version of this on the weekly market wrap. We'll also get into the news of the week and the economic data that gets you three things. One, that tells you where we've been, and it gives you a good idea of where we're going, and it does it in a data-driven format. It's not just my opinion, it's what the data says. So that will get you informed and on top and ahead of the other traders and investors. That's why you want to look at it. It gets you positioned for the weekend to get your mind right. And then a Monday morning when you walk in to look at your investments, or Sunday night, if you're like me, I do a little bit ahead of time, ahead of the market, you know, that will get you prepared, and that's why we do it. So stay tuned for that. And then Monday, we have a very special presentation from a company in the space working with silver to democratize silver for everybody around the world. We're going to talk about that opportunity, not really as much from an investment perspective, although you can if you want, but just from what they're creating. They're creating access to silver in a way in which every generation can participate. Special on Monday to talk about that as well. Stay tuned, guys. It looks like we're doing good. We're headed into the weekend with good news for gold and silver. I wouldn't even worry Friday if they fade a little. Usually they fade a little on Friday because it's the end of the week. Don't worry about it. Let's reevaluate and take stock on Monday and see where gold and silver is. But I'm not surprised that gold and silver are holding up this summer. I wrote an article at 𝘎𝑃 Bullion. I've talked about it on the program. They could still regress. That would be the seasonal pattern, but the seasonal pattern is not holding this year. And Wall Street's going long on gold. The bullion banks are moving into silver. I don't see where that's bearish in either case, because those are two big ass parties in the market making their bets. And they're betting differently, but it'd be interesting to see how that turns out. Let us know what you're betting on there in the chat and in the comments. All right, until next time, Rob Kientz, GoldSilverPros.com.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.